So we're currently in these NQ shorts, and as you guys can see, I've already taken $163 off of the table. We're floating around $300 in profit, and our break even is set at minus or plus $46. So that means overall we've banked $200 for the day, and the trade is currently running nicely in $300 worth of profit. So I thought I'd do another one of these videos where I showcase to you live what it looks like to be actually in a trade and me live trading. Now, as you can see from the top left, this is my 100k Express account on Top Step. Express meaning it's a live account. You can see my balance is $3,500. That means my total withdrawable profits is $3,500. Well, minus in $300 because we're currently unrealized floating, aren't we? So you guys are going to have to excuse the fact that I look like I work in a call center because the actual headphones that I use, my Rode mics, they actually broke. So I've ordered another mic off of Amazon. I'm waiting for that to come through. So in the meantime, this is the only other mic that I could find, and AirPods are just terrible. So this at least has some reasonably good quality of voice so you guys can actually hear me. But let me actually break down exactly why I'm in this trade in the first place. So here we are on TradingView. I can tell you why I'm taking this trade. And the first thing we have to understand is that we are a very counter trend. Now, I always say to you, you should always follow the trend because the trend is your friend, and you can't go wrong when you're just going with the flow of the market. So I've gone against my own advice and I've taken a counter trend trade. Now, the reason for that is because we've literally just broke all-time highs. The NASDAQ has been putting in brand new all-time highs for a long time, and every day we seem to be breaking new all-time highs, as we did this morning. But the key difference about today's trade is that number one, yes, we broke all-time highs, but we also swept the Asia high. Right, and as you guys know, I've been preaching this strategy to you over literally like the past 2 years on this channel. It's a very simple strategy. We sweep the Asia high, we wait for a market structure shift, and we trade price to the opposite liquidity, which in this case would be the Asia lows. Same on the flip side, if we swept the lows first, I would then target the Asia highs. Nice and simple. If you guys follow it, you'll make money. If you don't, doesn't bother me, right? But let's go back to the analysis. So number one, we put in a brand new all-time highs, and in doing so, we swept the Asia high. Now, not only that, but what we noticed from yesterday is that Jerome Powell actually didn't raise or lower interest rates. He left them exactly the same. Now, essentially, this is bad for the economy, but simultaneously is good for the economy because there's been no change, right? And previously, from what we can see in this market, we've been pushing to the upside. So fundamentally, we should continue to the upside because we've had no major change. So we should carry on with the intended direction of the market. So we've been potentially bullish, right? So yesterday, when the news came out at 7 p.m., when Powell stepped on stage that he's keeping the interest rates the same, price obviously dropped to take out external liquidity. And then from there, it continued this climb because we realized, it's markets are going to stay the same. But on top of all of that, after Powell said that he's keeping the interest rates the same, Trump went ahead and secured a deal with, I think it's South or North Korea. I can't remember which one, so you're going to have to excuse me. But they agreed on 15% tariffs. And that 15% tariffs means that the economy is going to be bringing in an additional, I think it's something like 350 million or billion. I can't remember again. You're going to have to excuse me. But they're going to be bringing in around 350 million or billion dollars in revenue just off of that one tariff deal that they've agreed on, which is, again, good for the economy. So price push to the upside. So we're very heavily bullish. But coming into today, because we've had so much bullish momentum in the market and we've continued to push to the upside, naturally, after we have a higher high, what do we need? A higher low. So similarly, just following the market in is market trends, we have a higher low, a higher high, and then obviously we anticipate a higher low, and then we can continue with that bullish momentum, right? Exactly the same way as we had here, higher high, high low, higher high, higher low, higher high. So following on with that same intention, if we can say that this is now our higher high, we now intend to put in a higher low. Therefore, in this instance, I can go against the trend because we're trying to catch that higher low. Now, the reason why I say you shouldn't go against the trend is because trying to catch that higher high going into the high low is very difficult unless you have experience. 9 times out of 10, you'll get stopped out multiple times. However, this trade followed my strategy checked all of the boxes. So I literally just had to trade. Now, as you guys can see, I did take a much earlier entry way before we had obviously the market structure shift. Now, I'm not going to run too deep into that because I'm going to keep that for the members inside of the VIP group. If you want to become part of the VIP group, click that link down in the description so you can become a consistently profitable trader like me. And we'll audit where you are in your current trading journey to see how we can get you to that next level to becoming that consistently profitable trader that you've always wanted to be. But on that note, as you can see, we've taken our entry and our price is rapidly pushing to the downside. So if I go back to my top step, we can see that we're now floating $367 in profit. So that looks really, really good. However, we do have unemployment news coming out in literally half an hour, which can impact the market. Now, again, I do have my exit already mapped out. I know exactly where I want to come out of this market. So, where is that going to be? We can see that right here we had the midnight opening gap that was created. Now, 9 times out of 10, what we've seen in the previous market, if I literally go back to yesterday, we can see that we had a midnight opening gap. Price pushed away from it in the morning, came back down, closed it, continued bullish, right? So what happened? We came to close the midnight opening gap, which generally speaking is the consensus in the market every time there is a opening gap. Exactly the same as this midnight opening gap. Price opens, comes to close it exactly at the very, very bottom and then rallies away from there. So following the exact same framework that the market has been showing us time and time again, I've got my take profit set at the midnight opening gap. That is going to give me a 124.2 risk to reward on this trade. Now, I also know that we have the Asia lows right here. And the Asia lows are always a very big draw on liquidity. And generally speaking, once we sweep those lows, we're going to get a reaction. And 9 times out of 10, if that reaction is sustained, we will catapult in the opposite direction, meaning I'll probably get taken out of this trade. However, if that reaction doesn't sustain, then I can anticipate price to come and close this opening gap. Now, I really want price to close that opening gap. If it doesn't close it, doesn't close it. I'm not fussed. I've already, like I said, reduced my risk off of this trade. I'm $46 in break even, and I've already banked $163. Not the biggest of amounts, but at least I'm completely risk free off of this trade. So if this trade hits, then I'll be $4,000, I think around $4,000 in total P&L for literally, I think it's just been 2 weeks. If you guys follow me on social media, you would have seen that in the first 2 weeks of this month, I was actually in Miami, so I was out of the country. I wasn't really trading because of the time difference, and to be honest, I just wanted to enjoy Miami, so didn't really bother trading. So as you can see, my trade history there is nothing, and I only got back on the 19th, so I started to trade again from Monday, which was last Monday, just gone, and since then, obviously, I've generated $3,264 in a profit. If today's trade closes, that should be $4,000, and that should be it. $4,000 for 2 weeks worth of work is very good in my opinion. Of course, the plan is to continue scaling our available capital so we can continue scaling how much profits we can extract from these markets. But as it looks, this trade should potentially, hopefully, go and hit our take profit. So I was just about to leave for the gym and I realized that price just had this crazy reaction to the upside. And like I said, we've got news in like 7 minutes. So I thought I'll just wait the 7 minutes, see how we react to the news, and then I can go to the gym. So, by the looks of it, what we've done, if we come up to the hourly time frame, is like I said, this is why you have to really understand that trading against the trend is very difficult because we've very clearly pushed to the upside, put in this higher high, then we've had a sort of pullback. And where did we pull back into? This hourly fair value gap that I had drawn out. So, like I said, when you're in a bullish trend or when you're in a pro trend sort of market, you always want to go with the trend because this trend will probably sustain a lot more than the counter trend that I've been trying to get into. So I knew that all well before I got into this trade anyway, so I'd already assumed the risk, which is why I'm heavily taking risk off of the table. But again, this is just to kind of show you guys in real time that when you are trading against the trend, it is very, very difficult. So by the looks of it, right, we are probably going to get break even before news even comes out. So we've got what, 5 minutes till the news. So what I'm going to do is I'm just going to reduce reduce my break even to as close to my entry as possible, just so we have some sort of breathing room. Now, I already have the understanding that this trade is most likely going to take me out of break even, but I'm okay with that. But I'm hoping that when news comes in, it pushes us lower and it takes us to our take profit. So that is my hope and anticipation. But I understand that the overarching or the overbearing sentiment of the market is bullish. Therefore, I can't be reliant on a bearish notion. So we're gonna ride this together. I was gonna do this at the gym. I was probably gonna be on my way to the gym right now and probably looking at this on my phone. But it's better if I just sit here and monitor this in front of my screen, just so it gives me better time to react. Then obviously we've got liquidity just above this high, and then we've also got a little bit of liquidity above this high as well. So both of those could potentially get tapped into. Not only that, but if we also look to the left a little bit, right, what we can see is that we've also got this 1 minute fair value gap, which is resting just above both of those areas of liquidity. So we could even potentially push up, tap into that, and then drop lower from there. So the news has had a little bit of a slower reaction. I wanted something a little bit more powerful, like that. So we've tapped into that 1 minute fair value gap. Now, if we reject off of this, then I'll be really happy. If we don't, then we're probably going to take a break even. By the looks of it, we've had a fantastic reaction from that 1 minute fair value gap. A really, really good reaction. And we after taking out these two areas of liquidity. So if we can just sustain this reaction and push a little bit lower, if we can break and close below this low, then I think we're in the clear. But again, we are still very, very well within sort of the news event happening. So anything can happen. Price can very much react from here and go higher. If we go up to the 5 minute, you can see that we've just tapped into this 5 minute fair value gap. That's why we're sort of having this reaction at the moment. So now, when you're in a situation like this, or when price is in a situation like this, we have two forces battling against each other. We've got obviously the bears that are trying to push, if I can find my brush. So we've got the bears trying to push lower from here. Simultaneously, we've got the bulls trying to take back control from here. So it's a case of which area is going to sustain and hold, because whichever one gets broken through is going to end up losing. So what I mean by that is if we can break and close with a big bearish candle below this 5 minute fair value gap, then we've had a 1 minute fair value gap reaction that has broken a 5 minute fair value gap to the downside. That would mean the bears are back in control and we're going to continue pushing lower. However, by the looks of it, we're very much struggling from this 5 minute fair value gap. And if we take a look at that on the 1 minute, you can see that we're now reacting off of that 5 minute fair value gap. And this reaction, if it sustains and we get a massive body engulfing candle that takes out this previous bearish candle, then the bulls are going to be back in control, right? And as it seems, that's exactly what's happening. So you just have to understand what the market is telling you and kind of react based off of that. So we're going to have to now figure out if there's any catalyst that can take us down. Nothing on the 1 minute. On the 30 seconds, we have this fair value gap, right? So if this fair value gap can sustain, if it can hold us, then we're going to push lower. If it can't hold us, then that's it. It's the end of this trend. If we continue a little bit lower, you can see that there is a much smaller 15-second fair value gap, which we've just tapped into. So now, this is going to be the decider, right? Do we hold from here? Do we react from here and go lower? Or do we push and break above it? If we break above it, it's game over. If we don't and we hold, we're in the clear. Now, the one thing that I absolutely hate is sitting and staring at charts, because I just feel like there's so much more productivity that can be happening throughout the day as opposed to just sitting here and staring at the charts. You quit your job to become a full-time trader. So you quit your 9 to 5 to get the freedom that trading brings. Why do you want to replace that with a 9 to 5 staring at the charts? And I feel like this is one thing that a lot of you guys can take on board. And if you incorporate that into your day-to-day trading, it will make you a much better trader because generally speaking, answer the question for yourself. Why do you want to change your 9 to 5 for a 9 to 5 on the charts? It just doesn't make sense. That's why I like to place my trades, analyze them, make sure everything is good, put my stops, take profits in place, and then just go about my day. Like I wanted to be at the gym already, but the reason why I'm still here and looking at these charts is just so you guys can watch it hit my break even. I don't want it to hit my break even. And the more that price chops around and sits in this area, the more I'm wondering, why am I still sitting here? I should be going to the gym. I should be getting on with my day. I've got 101 things left to do, and this should just play out on its own whenever it does, right? So, one piece of advice that I want you guys to take away is if you do sit at the charts and stare at it all day trying to find a trade, just don't, right? Have a clear set plan of what needs to happen for you to execute a position. If that set plan does not happen, don't execute. Don't sit there and stare at the charts because the more you stare at it, the more you're going to make scenarios up in your head of what needs to happen or what is happening and this and that. And then you kind of find trades that aren't there just for the sake of you staring at the charts, right? So just don't do that. Step away from the charts, go out and get some fresh air, touch the grass or whatever it is that they say, and you'll be much better off and your trading will become much, much, much better. So I'm back from the gym, and as you guys can see, full take profit has been hit. So I recorded my screen as the trade was going towards our take profit. We saw that price was struggling to decide whether it wanted to be bullish or bearish, and we had a lot of indecision right here where price was literally bouncing off of this 5-minute demand fair value gap or bullish fair value gap, and then we were struggling to go away from this bearish fair value gap up here. So we consolidated in this range for quite a while. New York Stock Exchange open at exactly 230. So let me put a vertical line at 230. Bang, right there. And we absolutely just tanked it directly to our take profit. Now on this trade, I would have much more preferred to actually have taken partial profits here, maybe take about 70-80% off of the table and then let the rest ride, because by the looks of it, right, like I said, we have to pull back once we go and put in a higher high. And that's what we were speaking about earlier. We had this higher low, put in this higher high. So obviously the anticipation is that we come down for a higher low and then a continuation higher. Where can that higher low stop? Well, we've got multiple areas of interest within this leg that we had to the upside. If we literally zoom in on the 15-minute time frame, we've got number one, this massive, massive fair value gap right here, which we're currently trading inside of. But then we've also got one right here at the extreme, which we can potentially push down into as well. And if I did hold, see if this is all in hindsight now, if I did hold all the way down to here, it would have been a 1 to 11 risk to reward. Now, by no means am I saying that I would have held, because very clearly you can see I didn't hold. I took full profits right there. And that's one thing that I also preach. Take profits. It's not real until you've taken these profits. Until that money is safely in your bank account, it's not real. This money can still be lost, right? That's why you always withdraw your profits, which is exactly what I'm going to do with these profits that I have up here. But overall, this was a really, really good trade. And like I said at the beginning, it was a counter trend trade. And I do not recommend that you trade counter trend if you are a beginner. So understand that. Understand that you're not going to be as good as I am when you're a beginner. So taking a counter trend trade, you're more likely to get stopped out than I will, because I will take a counter trend trade once 100% of my confluences have been met and then some. Whereas a lot of people try and take counter trend trades based off of one or two confluences. It just doesn't work like that. So this was counter trend, but it worked in my favor. If this was pro trend, like the trade I had the other day, then it would have worked, even more, and I would have had even more confidence to actually be able to hold a little bit further than this midnight opening gap. Similar to yesterday, I took a trade after we had a sweep of this external range liquidity all the way down here to the upside, and I took profits at the top here. Now, I could have very well held that all the way up here, but I don't like to hold trades overnight. And with platforms like TopStep, they don't allow you to hold trades overnight. So all of that being said, this has been a great video where we've had a nice take profit. We obviously got to watch how price had indecision up here and speak through that. and now we've ended up taking full profits at a nice 1 to, what was that, 1 to 4 risk to reward, 1 to 4.2 risk to reward. So I'm going to pop all of my profit shots right here. I also took this on my FX account, so I took 2.5 grand on this account, and then I'm just going to pop it all on the screen. 3 different accounts, and then my top step as well. So $800 on here, and then 2.5, 5, something like that. I'll put it all on the screen so you guys can see. So that is all of my profits for today. That's the trade done and done. If you guys have any questions, drop them down in the comment section. But that's pretty much going to wrap it up for this video. I hope you guys enjoyed it. If you did, then don't forget to leave a like, comment, and subscribe. And I'll catch you guys in the next video where I won't be looking like I work in a call center.